Greetings, my name is Kevin Matthews and I am the tax professor. Class is still in session because the learning never stops. I want to welcome you back and thank you very much for attending for another video that we have. Today we're going to talk about the lifetime learning credit for qualified tuition. This is a credit that a lot of people take advantage of, especially older people such as myself. When I went back for more schooling after I left the military, this was a tax credit that I used quite frequently, and so it's definitely something that I think you should take advantage of if you have the opportunity to do so. So the lifetime learning credit is for tuition and related expenses that you might incur when you go to school. Now, what kind of expenses qualify for the lifetime learning credit? There's a significant number of those expenses, and in order to go through those, that would take a long time. That would basically explode this video. So if you have any questions about those types of things, my recommendation is you can reach out to me. My name is Kevin Matthews again. I'm at betasolutionscpa.com, and that's www.betasolutionscpa.com, and you can send us an email through our info system, and I'd be happy to answer it for you if you have a direct question. If you feel it's something that everyone else could benefit from, feel free to leave it in the comment box below, and I'll be happy to address it as soon as I can. So the maximum that you can do with the lifetime learning credit per year is going to be a $2,000 tax credit. Now, a tax credit versus a tax deduction, tax credits are more valuable, and the reason why is because it reduces the amount of money you have to pay to Uncle Sam dollar for dollar as you would have on it. Now, the way that they kind of work this is that you take $10,000 worth of expenses as a maximum, and then you take 20% of whatever your expenses are. That's the amount of credit that you're going to be entitled to. So the credit is for any post-secondary related education that you might be taking as a result of, for example, it has to be at an accredited university, which falls under the eligible school. It does include graduate courses, which is a little different than the American Opportunity Tax Credit, which we talked about in another video. And so if you're going to be taking any of those types of courses, they would be useful for you. But here's basically what eligible schools includes. Number one, it includes accredited schools offering credit towards a bachelor's or associate's degree or other recognized post-high school credential. And two, certain vocational schools. The student needs not to be enrolled in a degree or certificate program. There's no course minimum, and the credit may be given even if only one course is taken. Very good example, and this is sort of anecdotal to me, because when I got out of school, not get out of school, when I got out of the Navy, I was kind of struggling to figure out what I wanted to do. Now, I did a massive career change where I went from military to CPA work, and so what I began to realize very quickly is I didn't really know a whole lot of what was going on. And so what happened is I had a master's in tax. I had a master's in business. I had a master's in accounting already, but I didn't take a whole lot of tax courses when I was back when I was in accounting school. And so I actually just went out initially just to go take a couple courses. I didn't actually want to seek a degree program. But once I took about 2 or 3 classes, I was like, this is a degree I absolutely want. This is a degree that I absolutely want and need. So I want to go ahead and take that. And so I did. And so, but I was still able to take the lifetime learning credit. So it's a very valuable credit if you are going to be going back and just getting brush up on some skills. Maybe, you've taken a new position that's more finance related that you had. You need to take another finance course in order to remember some of these pesky ratios that they have to deal with. That's just another example of that. Okay, so the lifetime learning credit, there are some limitations to it. One of the limitations is that if you are going to use if you're going to qualify your courses that you take as a business expense, it is not then allowable for the tax credit. You either get to use it as a business expense or you get to use it as a tax credit, and that can be very common. Actually, we do that a lot with the tax industry. There's when I went to American University, there were a lot of people who were using the courses that we were taking as their CPE for the entire year, and so technically, if they were self-employed individuals, they could have used that as a business deduction if that was the primary purpose of why they were doing it. That could be very valuable. If you receive a distribution from a Coverdell or a 529 program, you can't use the expenses that were paid for with those funds in order to take the lifetime learning credit. In other words, what the IRS is really trying to do here is they're trying to prevent double dipping, and I think that that's a pretty logical concept and an understanding one, especially. I think where a lot of people tend to get a little crazy with it, though, is they say, look, I'm only allowed to take a credit for 20%. That's only valued at 20% of the $10,000. So maybe the other $8,000 is allowable for these other events to get additional tax credits, and that's not the case. The $10,000 is applied towards your lifetime learning credit. Now, if you want to talk a little bit more about what would happen if you spent more money than the $10,000, feel free to leave a comment in the box below, or if you want to, you can reach out to me. So in order to get the credit, you're going to have to receive what's called a 1098-T. Now, a 1098-T is a very common form. I see probably about 100 of these a year. But basically what it is that it's going to say how much you were billed, how much you actually paid, whether you were a graduate student, whether you're a full-time student or not, or whatever. And so those are the kind of things that normally need to be done for other credits. The majority of what needs to be done for the lifetime learning credit is that you went to an eligible institution, got a 1098-T as a result of it. That's generally going to be the major things that they're going to be looking for. So the credit is a non-refundable credit, and what it means by a non-refundable credit is, say for example, I took $10,000 of expenses. I only had $1,000 of tax liability. They're going to allow me to take the credit up to the $1,000 of the tax liability that I had, bringing my tax down to zero. In other words, they're not going to hand me more money back. Now, that's different than what happens in the American Opportunities Credit. And again, I would recommend that you take a look at that video as soon as you can to see some of those differences. So there is a list of some of the expenses, and again, this is not an exhaustive list. If you really want to learn more about it, you can feel free to reach out to me. They generally conclude that you can take tuition and academic fees required for enrollment at an eligible educational institution. There are some specifics that the IRS has come out and basically said they will not allow you to take a deduction for, and that will include activity fees, athletic fees, insurance, books, room, board, tuition costs, and other personal living expenses. Courses involving sports, games, or hobbies that don't qualify unless they're part of the degree program. So if you're taking a course, say for example, and I did this when I was at Gonzaga. I actually took golf, and then I also took fencing. That wasn't part of my degree program. Those were just two classes that I decided to take because I figured since I was getting college educated, those were two sports I probably wanted to know a little bit about. And so as a result of which, I was able to take those courses and have that, but I would not be able to take that against a lifetime learning credit. Now, in my case, because when I went to Gonzaga, Gonzaga's tuition was far above $10,000. That really wasn't much of a problem. So another limitation is that qualified expenses are not allowed to include expenses that were covered by scholarships. So if I go to college and I spend, and college tuition is $25,000 and I get $20,000 worth of scholarships, I can only take the lifetime learning credit on the $5,000. So one of the problems that we have with this credit is going to be the phase-outs, and as a result of the phase-outs, what it's going to do is that if your income falls within certain ranges, you're going to actually start to lose this credit, and once you get to the high end of the phase-out, you've pretty much lost the credit as a whole. For married filing joint, it's $114,000 to $134,000. For single or head of household personnel, it is $57,000 to $67,000, and people who are married filing separate cannot take the credit. A final limitation that we have with this credit is you can't take the credit if you are claimed as a dependent on somebody else's tax return. This kind of prevents where you might have some high-income taxpayers who are paying for the education for their children, and the children try to take the credit on their tax returns. That's actually something they don't want you to do, and so they're going to prevent you from doing that by those rules. Now, there's a few ways that we can work with that. Again, that would be something you'd want to reach out to a CPA, an EA, or a tax attorney, or you can reach out to me, and I'd be very happy to walk you through it and help you with it. So there are other technical requirements that might apply. We really haven't hit too deep into this subject. There are some other things that we could talk about. I do have questions oftentimes, people who are sending kids overseas. I also have questions about people who are paying for certain expenses. Does it really qualify as, you know, you have to have this in order to attend the program? Is it qualifiable, and all that? And then sometimes what ends up happening, it's not so much that the person doesn't, you know, tries to do the wrong thing. It's just that because the lifetime learning credit has certain requirements, the American Opportunities tax credit has certain requirements, and then you also have the 529s and the Coverdell expenses have certain requirements. It can get real confusing, and so if you have any questions, feel free to leave a comment in the box below. And if you you know, if you want to, you can reach out to me. Go ahead and go to my website at www.betasolutionscpa.com, and you'll be able to reach out to me through the contact us and have that conversation. Thank you very much for watching this video.